Time now for business with Michelle Rafferty. And Michelle, some surprising figures out today.
Yes, Kim, there's been a surprise slump in business investment in the first 3 months of the year. The Bureau of Statistics figures show overall capital expenditure dropped 4.7% in seasonally adjusted terms. Economists expect a rise of 0.5%. Spending on equipment, plant and machinery slipped 3.3% and outlay on new buildings slumped. It comes after a weak reading in the December quarter. The market is most interested in the spending forecast for the current financial year, which is down slightly to $163 billion. Other data out today is more positive. More figures show the Bureau show approvals in building homes has jumped in April, the 9.1% in seasonally adjusted terms. That's more than double the forecast by economists. Housing is one of the sectors the Reserve Bank is relying upon to fill the gap left by the mining boom. The market has dropped further on the release of those business investment figures. The Australian dollar is now buying just over 96.9 cents against the greenback. The share market is off session lows but remains down as a fall in metal prices weighs on the mining stocks. The All Ordinaries is down just over 1%. The ASX 200 has fallen in line with it. Across the region, the Nikkei has fallen 5% and in Hong Kong the Hang Seng is down nearly 1%. Gold is holding just under $1,400 an ounce and Tapas and West Texas crude are also down. Don Volti has been appointed as the new Managing Director of the Seven Group Holdings Limited. He's presently the Chief Executive of Seven West Media, where he'll remain as the Deputy Chairman. Mr Volti will start in the new position in July. A leading global forecaster says Australia's economic growth is likely to suffer as it transitions out of the mining boom. The Organisation for Economic Cooperation and Development expects growth to halve from last year to 2.6% this year. It says the mining investment boom is slowing down. It's called for tax reforms, raising the GST and improving the effectiveness of housing and corporation taxes. It's also recommending strengthening childcare, preschool and parental leave. Sweatshop conditions, child labour and factory disasters that kill thousands of people. For investors, it's a scary scenario, but one that has to be confronted as retailers continue to source goods from countries like Bangladesh. Andrew Robertson reports.
It was the worst nightmare for every investor in a Western retailer. A substandard factory collapses in an impoverished country, killing 1,000 people, and there's proof in the rubble that your company was a customer. That's exactly what happened in Bangladesh for Northern Hemisphere retail giants like Primark, Mango and Benetton.
It would depend on how strongly I think it was tied to the brand and how much one thought that the customers of that particular brand would change their buying behaviour. Another thing that investors are starting to think about is whether there might be any liability for compensation.
Primark is among the retailers who've agreed to pay compensation over the Bangladeshi tragedy. Australian companies like Wesfarmers, Woolworths and Premier Investments are also sourcing supplies from Bangladesh, which is why Citigroup has been trying to get some answers from them.
What we find is some companies do have specific initiatives that look at these particular issues and risks. Other companies that we approached wouldn't really tell us anything much about what they were doing to mitigate these risks.
And it's not just clothes from Bangladesh under the spotlight. In recent weeks, Coles and Woolworths have very publicly stepped up their push for parallel importing. In some cases, it's cheap Asian versions of products made in Australia. For example, Coles trying and failing with bringing in Coca-Cola from Indonesia.
Do we want an environment where we pay our workers $1.50 an hour? That's the point. Of course we don't.
But in much of Asia, workers earn a lot less than $1.50 an hour, which is why charities like Oxfam are concerned by the renewed onslaught of the supermarkets against their Australian suppliers. A decade ago, companies like Nike came under intense pressure over their use of sweatshops in Asia to make their products. As a result, 10 years on, Nike has the names of its nearly 800 suppliers all over the world on its website, as well as their addresses and maps showing how to get there. Australian retailers keep details of their Asian suppliers secret.
That's the latest from the finance desk, and Kim will have more on the slump in those business figures later in the bulletin.
Okay, thanks very much.